Welcome to our monthly Engage Academy webinar presented by Landis Associates. Merry Christmas to you. My name is Rich Landis and I will be your host today. Today's topic, we're going to be covering some year-end tax tips. As we enter December of 2017, there's some things that can be done prior to the end of the year and some after December 31st that would have an effect on your tax burden. This has been an interesting year. It's been a difficult year as far as tax planning. I'm sure everybody's aware there's been some discussion as far as a new tax bill coming out of Washington. It's still too early to tell. We still do not have anything finalized yet. There's been a lot of discussion, but still nothing to hang our hat on, so to speak. So we're just going to be covering some things that's not knowing exactly what 2018 is going to bring in, but using the information that we have today. Just as a reminder, most of the items that we cover today, that they have to be, the transactions has to transpire by the end of the year. There's certain things that can be done up until April 18th, this year's due date, April 18th, 2018, which is the due date of the filing due date of the 2017 return. But most transactions have to occur by December 31st, 2017. As a general rule, it's a good practice if you can control to defer your income into next year and accelerate your expenses into 2017. This is a good practice unless you feel that your income is going to be up dramatically next year, pushing you up in potentially pushing you up in a higher bracket. And there, we would not want to do that acceleration and of income into next year, defer and accelerate expenses. Another item that's always good practice is to contribute to your retirement plans. Make sure that you are maxing out your 401k plan at work if that is provided for you. And you can, if eligible, an IRA contribution can be made. Now that is something that can be done post 12/31. So we can see exactly what your tax burden is and then see whether that is advantageous or not. Another trick that I like to point out here is with your investments. Depending on where you fall in the brackets here, if you're in the 0% bracket or the 10% bracket or the 15% bracket, the actual rate on long-term capital gain income is 0%. So therefore, it could be advantageous to liquidate some stock to generate a gain. And if you're in those lower brackets, you would not be paying any taxes on that. I get the comeback sometimes. Well, hey, this investment's really doing well for me. I don't want to liquidate it. And what you can do, you can liquidate it and buy it right back, and that would increase the basis at 0% tax burden. Now, some people think, well, I can't do that. You have a 30-day wash rule. That only has to do with losses. So in the gain scenario there, that is a viable option. As always, there's things we can contribute here from personal deductions. We can contribute to a charity by December 31st to get the deduction. Now, if it's paid by cash, that cash has to be dispersed. The check has to be written by 12/31. 2017. If it's by credit card, the transaction has to be charged. Now, you can pay your credit card in 2018, but the credit card transaction has to transpire in 2017. Another item you might want to consider if you are self-employed or you have to make quarterly tax payments for state and to the local bureaus, you might want to consider paying that by December 31st this year. In both versions of the proposed bill, there has been quite a bit of discussion as far as eliminating the deduction for state and local income taxes. Again, not written in stone. We'll have to see where that lands, but we know if we do write it by December 31st, by the end of this year, we will have a deduction for that, even if they do not repeal it. So another thing you might want to look at here is with your medical deductions. If eligible, if your income, depending where you fall, there might be some benefit of paying your medical bills here in 2017. There's been discussion out of Washington that the standard deduction would be doubled next year, up to $24,000. So it's possible that some of these personal itemized deductions would not be, would get washed out because of the standard higher deduction. Like I said, they're doubling it to $24,000. That's the proposal. Again, I have to stress that nothing has been passed as of the time of this webinar. But that might be a good idea to go ahead and pay in your medical expenses just because of that change. Also, in the business arena, you can purchase equipment and get a deduction up to $510,000 this year. Now, the key with that, now that 510, it all depends how much equipment you purchase, but up to 510 is a potential deduction for you. I always stress with my clients, though, I never advise people to go out and spend money to save taxes. If you feel you're going to need equipment, you're going to get it by maybe spring of next year, well then, yeah, it's probably a good idea to go out and get it here in December to record that deduction in 2017. But it is key to point out that in order to be eligible for that deduction, the equipment has to be placed in service. Paying for the equipment, paying a deposit on the equipment, that's nothing at all. I mean, the equipment has to be placed in service by the end of the year to be eligible, for this deduction. As I mentioned before, we have this new tax act that's being proposed down in Washington. A lot of discussion. I feel comfortable saying that I do feel that something will be passed this year. I think Congress is under extreme pressure to do something this year. I mean that. So we'll see what pans out. But there are many proposed changes. It's really too early to tell where they're going to land. It's going to affect some people positive. It's going to affect some people negatively. But I think for the majority, at least the majority of people that I deal with, that I don't see a major change either way. It's just going to be shuffling some things around. But as with any new tax act, it brings a whole different avenue, tax planning. So yes, if you'd like to have more information on that, you can go to our website, landiscpa.com. You can email us at info@landiscpa.com. And also, if you want a phone call, you can call at 717-735-0834. So I'd like to thank you for attending today, and I'd like to just wish you and your family a very Merry Christmas. Thank you, and have a great day.